morning. Good morning. Um, Sorry for my tardiness. I know it's only like a minute or so, but I was just um wrapping up a trade. Well, I ain't gonna say I was wrapping up a trade. I was in a trade and it was just about to hit my target. And I was trying to get my what's thing together. And so when I looked up, I'm like, oh, let me because I just made my streams and stuff like that. But welcome. Good morning to you. The birds are chirping. What's up, Michelle Tucker? What's going on? Good morning, family. The CPI numbers came out, and I can only assume that they were better than expected. Because as I sat here and I watched that 1 minute candle do this right here, when I watched that 1 minute candle do that, I said the numbers must have been vainglorious. Vainglorious. And for those who are interested in what trade did I take, I did not take this one that came back here. Can someone please tell me before we start, I'm going to give you some food for thought. Tell me why I didn't take this trade back to this fair value gap right here. And then tell me why I took the trade coming to this fair value gap right here. Someone let me know. Put it in the chat. What do you think? Why I did not take this one here. I'm going to mark out this one. I'm going to make this red. I'll make this red because I didn't take it, right? I'll make this red because I didn't take it. Rojo. I'm going to make it rojo, right? Did the wrong thing. Okay, I'll leave it like that. Then I'm going to make this one here, shade this green. I'm going to shade this green because I did take it. And while I'm getting ready, y'all put it in the chat why you think that is. Right? Put it in the chat. The red box up here, why I didn't take that fair value gap there. Right? Looked at it, curious about it, but why I didn't take it. And then why I did take this one right there. Okay. Good morning. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But give you a nice hearty well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am. Oh, I forgot about my homeboy back here, Spidey. Hanging out with me and my homeboy Spidey over here. Spidey keep moving on me. Spidey used to be like right there, but he like over there somewhere now. He keep moving on me. And my sweetie over here in the back corner right over there. The love of my life. My sweetie moving too. What's going on with my camera? My sweetie done moved. Okay. Love of my life. Right? If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day. And I talk about the same thing. The price action, dealing with the S&P 500. And why do I do this? Why I do this repetitive actions? Because I want to help someone like you get your aha moment when it comes to trading and investing in all things stock market. See, somebody helped me once upon a time to get my aha moment. So I want to help you. I want you to save your hard-earned money, put it in the market, and execute on the things that that we discussed here. Right? Shout out here to Learn and Share, coming through with the hard-hitting answers already. I appreciate you for that. Coming through with the hard-hitting answers already. Yeah, man. Every day, 9 a.m. Eastern Time, 6:30 p.m. Eastern Time, twice a day, Monday through Friday. We out here, man. Who out here in these trading streets giving it to you like this? Who out here besides the gang? But we letting people know every day, we not bulls or bears. We are beasts. You hear me? Who out here in these hard-hitting trading streets giving it to you like this besides the gang? Who out here breaking it down, trying to really help people understand this, how to trade, how to invest? Who out here in these hard-hitting trading streets like this, man? Who out here doing it like this every day? The gang, y'all pulling up every day. I salute you with both hands. Hear me. Good morning. What's up, Kareem? We're going to go ahead and get into it. What's up, Angela? What's going on, Laverne? What's up, Linda? Man, I still don't understand how my seed walk. Hey. Good morning, everybody. I feel kind of tired, so I'm going to wake myself up through a song. I won't be in front you long. Give me 30 minutes and then we'll be finished. Hey, man, let's go ahead and get into it, man. Let's get it started. Let's get it started in here. Okay. As y'all can see, all the stuff that I was watching. Oh, wait a minute. Wait a minute. Hey. We gotta go see our friend. Who is our friend? Y'all know our friend. Some people call her the SPY. If you don't know, the SPY is the ETF that tracks the performance of the S&P 500. Around here, we call it SPY lean. Now, before we start, don't get in any trouble on your job. If you're at work, don't get no funny looks from your coworkers right now. If you're at Whole Foods, don't sing along. But if you're in the comfort of your own home or riding in your automobile and you know the lyrics to the song, sing it with me on the count of 3. 1, 2, 3. Let's go. Spy lean, where you at, baby? Here I go. Hey, how you doing? I'm glad that you came through. Oh, Spy lean, girl, what you about to do? Nothing can stop me. I'm all the way up. Right now, SPY lean is about to gap up a couple dollars. $2.26. Is my mathing? $2.26. Again, for anybody that do not know what creates the gap up or down on the SPY in the morning time, the ES futures trade 23 hours a day. The SPY only trades from 9:30 in the morning New York time to 4 p.m. New York time. So as the ES is trading, if you notice, the ES has a candle for today already. As the ES is trading throughout the night, if the ES is higher than it closed yesterday, there will be a gap up on the SPY. ES closed here yesterday, and right now it's up there. It's higher than it closed, right? So as long as it stays higher than it closed, when the SPY opens, the SPY will open up higher than it closed. Just like that. Now, let's get into the price action. Before we get into the price action, we've been slacking on looking at our economic data. I'm not going to hold you. We have been slacking on looking at our economic data. Economic data is very important. As you see, I knew it. I knew it. I knew it. I knew that the CPI numbers were good. How did I know that without even looking at the chart? Think about it. It's all about the narrative, right? It's all about the narrative. The feds want to control inflation. They want us to stop spending a lot of money. They want us to not have to pay so much for stuff. You know what I'm saying? They want it to contract a little bit. They want the consumer price index to pull back a little bit. That's what they want, right? So if it comes in under what they're expecting, that's pulling back some. If it comes in as expected, they cool with that. But if it come in under what they expect, that's contracting. They want it to pull back a little bit. And so the Fed is winning. The Fed is getting what they want. So if the numbers come out showing that the Fed is getting what they want, the market will go dum dum diddy dum dum. And so when I sat there and watched that 1 minute candle, right? When I sat there and watched that 1 minute candle, could y'all could not see my screen, could you? The whole time. Y'all couldn't see my screen when I was, yeah, y'all could see my screen because I was singing Spalene. I hope. Yeah, y'all could see my screen, right? Mama, I want to trade. Hey, hey. Okay, I appreciate that. I appreciate that. So when I saw that 1 minute candle go dumb like this right here, I said, oh, yes, sir. Oh, yes, sir. The CPI numbers came in better than expected. So just understanding the narrative, right? Understanding the narrative of what the Fed wants, right? And then seeing the reaction of the price, that let me know that the CPI numbers came in better than expected. Because it all starts with the narrative. That's one thing that people who don't really understand what's really behind the ICT concepts, they think it's all about technical analysis, right? And shout out my homie Jay, like a little brother to me. It's like he don't get it when I say I'm not a technicalist. I don't trade using technical analysis. You know what I'm saying? He say, but you looking at the charts, but it's deeper than that. That's why I say I trade price action. I don't say I trade technical analysis. I trade price action, right? And when you understand, it starts with the narrative, right? It starts with the narrative, understanding the narrative, right? Understanding what market conditions you in, understanding what other like correlated and inversely correlated markets are doing, being aware of the bigger picture. That it's like it's so much deeper than looking for a fair value gap on a chart. It's so much deeper than looking for a breaker on a chart. It's so much deeper than, okay, we just took liquidity. What is it going to do? It's so much deeper than that. It's all about understanding the narrative first. And once you align yourself with the narrative, right, then it's about where is price trying to get to? Where is price trying to get to? How is it going to use this news to get to that point? How is it going to use the lack of news to get to that point? And then once you understand where it's trying to get to, then you want to start digging into the charts, looking for an entry opportunity. But it's like you've done so much homework before you even sit down in front of the charts, right? To keep yourself in line, in tune with what the market is doing. I don't know if anybody got the opportunity to listen to ICT's live stream that he did yesterday. I went back and watched it yesterday afternoon, and he was talking about how he had been gone for a week. He hadn't looked at the charts for a whole week, and he said he just took Monday. He took Monday to just look at the charts, trying to get back in tune with price. Yesterday, he didn't have no high expectations on his biases because he's still trying. He was like, by Friday, I'll be back in the saddle and ready to go, because it's like you want to be in tune with what price has been doing, right? What's the first thing I always say? Whenever you get to a destination, you look back to see what price has been doing. If you haven't been sitting there watching it, you be out of sync. So you don't know what price has done and how it did it. That's very important. Not just what it's done, but how did it do it? You know what I'm saying? For example, today, how did it make this candle right here? Right? It made that a candle. So the way it made this run up is different than the way it's making this pull back down. It's different, totally different. Right? Totally different. This run up, right, was totally different than this pull back down. Right? This short right here was different than this short right here. Right? And it's different than this short right here. Right? Let's just look at that. Let's just look at it real quick while I'm saying it. Right? So we took off here. The news came out at 8:30. Right? At 8:30, we opened up right at the new day opening gap, at the high of this new day opening gap right here. Right? Just before the news dropped, it wicked down and kissed this breaker. Right? Y'all remember that breaker? Did we talk about that breaker? Let me not lie. Did we talk about that break? Yes, we talked about that breaker. Y'all remember this breaker right here? Right? That's the breaker that we marked out. Right? I think we talked about that breaker. If we didn't, I jollipize. But I really think we talked about that breaker. Right? Before the news dropped at 8:29, I said, man, I was on the phone with my sweetie. I said, man, they going dummy right now. And the news ain't even come out yet. I'm talking about they wick down heavy and touch that breaker and wick back up, right? And then as soon as the news dropped, 8:30, boom, pang out, took off, right? It took off, came all the way up here, hit that, kept going, pushing, right? We took out the weekly high immediately, right? This the weekly high up here. Took out the weekly high, right, immediately. So 1 minute, we covered all this ground, and then 2, 3, 4. It took 4 minutes in total to hit the weekly high, right? That's an entire 41.71.75, 41.71.75. And then we opened up here at 41.38.25 minus 41.38.25. 33. It moved 33 and a half points in under 4 minutes, because this candle right here would have been the 4th minute. 1, 2, 3, 4. And we cleared it in that minute. So in under 4 minutes, right, less than 4 minutes, we moved 33 and a half points, right? Wicked crazy. Now, this short right here, coming from this short right here, right? if you would have taken this short off this fair value gap, looking for or institutional order flow entry drill, you would have got picked up on this candle right here, right? So that's 1, 2, 3, right? That's 3 minutes right there. 1, 2, 3 minutes. It came down. Before it gave you the entry, it stayed there for 1, 2, 3, 4, 5 minutes, just hovering under the bottom, and then finally poked in on that 6th minute, right? So you had to wait 6 minutes, right? This one here, it was immediate, soon as it opened. So immediate, and then in less than 4 minutes, immediate move, less than 4 minutes, move 33.5 points. Wait 6 minutes, and then once you wait the 6 minutes, in 3 minutes, right, you got the move to get your 5 or 10 points, whatever you was looking for, right? So 4171.25. I mean 4170.25. 4170.25. We're doing the institutional order flow entry drill, right? And then 71.25, it came all the way down to 61.50. It didn't do the 10, so we're gonna do the 5, right? We're gonna do 5 minus 5. 65.25. 65.25 right there, right? So you was in the trade for less than 2 minutes. Took 6 minutes to get into the trade. Then you was in the trade for 5 points in less than 2 minutes, right? Now, this entry right here, 1, 2, 3, 4. Oh, and on this one here, you took a little bit of heat for less than a minute, because this is all 1 minute candle. You got in, pushed up, came down. You took a little bit of heat for less than a minute, and then you were in a trade for less than 2 minutes. Now, this entry here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You waited almost 10 minutes to get picked up, right? You waited almost 10 minutes to get picked up on this trade. Then you took heat for 1, 2, for a little over a minute. You took heat for over a minute, right? You took heat for over a minute, and then you cleared your 5 points. I cleared a little bit more than 5 points, but you cleared your 5 points. So you was in the trade for 1, 2, 3, 4. Let's get the entry. 4167. 4167 minus 5. 4162 right here. Okay, so 1, 2, 3, 4, 5. You was in the trade for 1, 2, 3, 4, 5. So it took you almost 10 minutes to get in the trade, and you were in the trade for a little less than 5 minutes, right? So I'm saying all that to say the way price moves tells the story, right? From the news, it was an immediate move. Soon as the news dropped, immediate, and in less than 4 minutes, it moved 33.5 points. We pulling back for this entry. If you took the reckless Randy, the risky Randy, reckless Rachel entry, right? You had to wait. Once the fair value got formed, you had to wait 1, 2, 3, 4. You got picked up in a little under 5 minutes, right? You took heat for less than a minute, right? A few seconds of heat, and then you were out of the trade, and 1, 2, in less than 2 minutes, right? You was in the trade for under 2 minutes. If you took this second trade, you had to wait 1, 2, 3, 4, 5, 6, 7, 8, 9, right? 9 minutes to get in the trade. took heat for over a minute, and then you were out the trade. You was in the trade for 1, 2, 3, less than a little under 5 minutes. So the way price moves tells the story, and it's a lot easier. I mean, it's a lot easier to come in here just like right now. It's a lot easier for anybody who just opened a chart right now and they see this right here. They don't understand the mental part of watching this fly up that really fast and then getting into this trade and it coming down and hitting your target relatively quick, and then seeing how this one hit quick and drop quick, and then seeing this one here wait for almost 10 minutes, and you're sitting there like, man, is it going to get me? Is it going to get me? Is it going to get me? That's mentally taxing. It's mentally taxing. And that's where trusting the process comes into play. Trusting what you have studied and back tested and sim traded. That's where it comes into play when you doing it, watching it live. This is what gives you that intestinal fortitude to push through when you see people talking about, hey, I did this, I did that, I did this, I did that. And then when you come in here and you take the trade and you see this trade get picked up in like 4 minutes, and then it move you in the trade for, you hear people say, oh, I made such and such in 5 minutes today, right? And then you thinking every trade you get in gonna move that fast, right? But every trade you get in not gonna move that fast, right? And then look at this one over here. What if you took an institutional order flow entry drill on this one right here? 4161, 4162, right? 4162, you would have got picked up there. You would have taken heat for 1, 2, 3, 4, less than 4 minutes. You took heat for like over 4 minutes on this trade. You took heat over here for almost 2 minutes. Over here, you took heat for almost 4 minutes, right? You took heat for less than a minute over here, like maybe a few seconds, right? You took heat for a few seconds here. No harm, no foul. You took heat for almost 2 minutes right here. No harm, no foul. But you took heat for 4 minutes, almost 4 minutes over here. That make you do the whole clinch up tight, right? That make you do the whole clinch up tight. And then this one here might have got you out. That candle might have got you out. This candle definitely got you out. So we're going to go with the 927 candle, right? So you got picked up here, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Is that it? No, that ain't it. That's it right there. A long time. Long time. You took heat for almost 4 minutes, and then you had to stay in the trade for over 10 minutes just to get 5 points. Right? So let's break it down again. Waited 4 minutes to get picked up, took about 30 seconds of heat out of the trade in less than 2 minutes. Waited 9 minutes to get picked up, took over a minute of heat out of the trade in, what was it? 1, 2, 3, 4, 5, in less than 5 minutes, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Waited 13 minutes to get picked up. Took over 4 minutes of heat. Had to stay in the trade for well over 10 minutes. Got picked up on 14. Got out at 28. That's 14 minutes. Almost 15 minutes in the trade. Can you understand the mindset of the difference of your mental capacity, if you would, not capacity, your mental state of being in these 3 different trades, right? Being in these 3 different trades. And then mind you now, from here to taking out the weekly high took less than 4 minutes, right? Took less than 4 minutes. So from 8:34 and the market open, the market is open. If you're going to trade, please trade safe. If you're not going to trade, please take copious notes so you can go back and study what you saw today, right? And now it's an hour later, and we still haven't retraced all of what we did in less than 4 minutes. The way the market moves tell an important story. I'm hammering this home. This is just something that I just thought up while we were sitting here talking. I didn't even plan on talking about this, but I thought of this as we sitting here talking. So if you don't go back and watch the candles print in real time, right? NinjaTrader allows you to do it easily. You know what I'm saying? The playback data, it plays it back in real time. I advise you to take some time to go back and just watch the candles print during whatever time you're going to trade. It be at London, be it New York morning, be it New York evening. Go back and just watch the section of the day that you plan on trading. Watch how the candle prints during that time so that you can start to get a feel for, how the market moves. It's very important, man. It's very important. The eggs I buy are not $3.70. They were $6.30 back in February. Yeah, they lied. I ain't been looking at prices. I used to just cry when I looked at prices. I just go to the store and thank God that I can buy it. Hey, man, I done been on here for over 33 minutes. I know we didn't talk about the overnight price action, but something was laid on my spirit this morning to talk about. Shout out here to Learn and Share coming through with the hard hitting answers this morning. For those who tuned in a little bit later, when I first got on, I apologize for being slightly late, but I was in a trade. I was setting up my live streams. I was, just trying to get myself together. And I said, can anybody tell me why I didn't take the short off of this fair value gap right here, and why I did take the short off of this fair value gap right here, right? And here to Learn and Share came through with the hard-hitting answer of waiting for a break in market structure. And that is the absolute correct truth, right? We came up, we took out buy side liquidity at a higher time frame. This is the weekly high right here. It coincides with the weekly high where we took out that high right there. That's the weekly high. It coincides with the weekly high right there where we took out that buy side right there. That's the weekly high. Once we took it out, right, we came down. This right here, that could have been a short for, for somebody. I didn't take it. It could have been a short for somebody because we did break through a low right there, right? But after we consolidated right here and then we left there, right? We consolidated there and left there. What does that make this right here? Right? Somebody drop it in the chat. Somebody drop it in the chat, right? Came there, left a fair value gap in the wake, right? Left a fair value gap in the wake. I say, that's my spot. I dropped the limit order right there. Boom. Give me in right there. Drop the limit order there. And then I sat here, worked on my thumbnails for the chart. Balance price range. Very good. Balance price range, right? That's my spot there. Why? Because we just ran buy side liquidity, right? We just ran buy side liquidity on a higher time frame, right? We came down, we took out that low, right? Consolidated here, pushed back up into it, right? Stopped right at on a dime, the high that we just took out, right? And rejected off of it heavily, right? And then left this consolidation area right there, right? Run liquidity, right? Come back up. Don't even feel the imbalance in. Reject off the prior high, right? And then leave this area right there. Bing, 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 bing. Balance price range. Drop my order right there when it made that fair value. Soon as it made that fair value gap, boom. Drop my limit order right there. It went up there, played around with me, came back down. So, okay, you're going to do me like that. I'm cool. I'm going to leave it there. Kept doing what I was doing. Consolidate, consolidate, consolidate. Pick me up. Took a little heat, not worried about it. Why? This is a balanced price range right there. We just took out buy side liquidity. We just rejected off that prior high without even feeling this right here. This right here is extremely bearish in this moment. When you don't completely feel the imbalance and reject off of it like that right there, that's extremely bearish or bullish if you're going the other way. All right. Then we come down, leave that area, balance price range. So now the algo has no desire to go back past this area right here, right? We came up, got a little wick work right there, a little wick work, got into the body of that down close candle right there. No harm, no foul. Then pushed on down, right? That was the thought process behind taking that trade right there. Took buy side liquidity on a higher time frame, right? Market started coming back down, showed extreme bearishness right here, right? Y'all know why I said that. Made a balanced price range here. That was the signal that it was a balanced price range because we left that area. We offered, not just because we left that area. Let me say it right. We offered sell side, buy side, sell side, buy side, sell side, buy side. Got into the imbalance, showed extreme bearishness, then left that area, right? Offered sell side, buy side, then left the area. Balanced price range. Don't expect price to go back past this area till it comes and handles some business, right? Leave a fair value gap in the wake. That's the entry. To trust the process that it won't come back up to this high because we just ran sell side liquidity. Buy side liquidity. So the market does not want to go back up there right now. That's the thought process behind that. That's all I got. Do anybody got anything else before I go? Do anyone have anything else before I go? Does anyone have anything else before I go? Anything else before I go? Thank you, thank you. So is consolidation just a balance? It'll become a balanced price range after the market leaves it, but it's not so much about it being consolidation. That's a good question, Lil Hope. It's not so much about being consolidation, right? And let me show y'all this. Now, usually I don't do this, but I know it's a lot of new people around that's coming around, and a lot of people probably haven't seen me trade before. You know what I'm saying? But I'm just trying to make sure I ain't got no personal information on here. Nothing that I want y'all to see. But for those, I don't want nobody to ever call cap on me. Right there. Sell 2, 41.66.75. Buy back 1, 41.61. Buy back 1, 41.59.25. Now, I usually don't do that because I really don't care. But I get it that some people need to see the proof that I can do it, which I don't understand why. Because it's all about is if you can do it. Because if I can do it, doesn't mean that you'll be able to do it and you'll be able to sit through. Like, remember what I said? Sit through here. That was me. That was me waiting 9 minutes. Right? And pull this back over here. Right? That was me waiting. I got in at 8:55:48. Right? So at 8:55:48, I got picked up right here on this candle right here. 8:55:48. So right at this candle closed at 8:56. So I got picked up right at the end of this candle right here. Right? So right at the end of this candle right here, I got picked up. Right? So when this candle closed, that was like 12 seconds right there. 12 seconds was left on that candle. And then that was another minute. So that's a minute and 12 that I'm in drawdown. And then this candle right here, you know what I'm saying? So just say 2 minutes of drawdown, not worried about it, started moving out. And then the first, what's the name I took off was a little bit below this low right here. This low right here is at 41.61.75, right? And I took it off right here at 41.61, a little bit below that low, right? And then when I took it off a little bit below that low, I took the other one off, was it 25? Right here. Because I just had them staggered out and I didn't try to move it or drag it anywhere. I just, wherever I just got it defaulted to like put it somewhere. And when it went there, the first one I brought it up here just below this low, right? Just below this low to give me at least 5 points. Then the other one, I just left it there and it happened to be at 41.59.25, right? That will probably be the last time I do that. Maybe, maybe not. I don't know. But just so people won't be like, he always be saying that he did this or he did that. And then. But the True Blue Gang members know that I can trade. Now, back to what Lil Hawk was saying. It's not so much because it's consolidation that it's a balanced price range. It's the fact what the algorithm did with that area that lets you know that it's a balanced price range, right? Is what, and what I mean by that is when the algorithm leaves that area, especially in an aggressive way like this right here, right, and giving you a fair value gap, it's leaving in a hurry. That's tipping the hand that that's a balanced price range. Because a balanced price range This right here, this area right here, right? That's a balanced price range. How do I know that? Because the algorithm took off right here. Pang out. Gone. And it's up and down. It's not consolidating, it's up and down. But once we went up, we went down, right? And then once the algorithm leaves it, you know what I'm saying? It's done with that area for the time being until it goes and does something else. Goes and does something else. So it's not just because it's consolidation, it's the motion of the algo after the consolidation or after offering the buy side and offering the sell side, because it's all about, did it leave any imbalance, right? So once there's no imbalance, be it consolidation or trading up and trading down, when the algo leaves that area, like shooting away from it like that, that's the algo tipping his hat, tipping his hand. Hey, that's a potential balance price range. I paper traded the same trade, feeling confident about my debt. That's what's up. Congratulations, Kim. Congratulations. Congratulations. What was your second exit based on? Was it that you were leaving a runner, possibly get more since there was? Nah, in this case right here, it wasn't based on nothing technical. I got an ATM that's set up where when I put on my two contracts, it just gives me two separate exits so I can adjust it to different points. Like I was saying here, I took the first one just below this low and I put it below the low where I can get more than 5 points. You know what I'm saying? Because I want to cover the cost. So I don't take it right at 5. I take it a little bit over 5 because I want to cover the cost of doing the trade. You know what I'm saying? I want the 5 points in my pocket. So it's like I cover the cost of doing the trade. And then the second one, if I would have, remember when I said I just left it where it was, if I had something else over here to target, like another low, then I would have put it to like that low or something. But since we got this huge imbalance right here, and I don't feel like sitting in the trade forever. I ain't feel like sitting in the trade for an hour, you know what I'm saying, to come back to consequent encroachment. I ain't know how long it was going to take. You know what I'm saying? I could have very well just pushed it way down here and been like, oh, I think we're going to come all the way back down and feel that. But I'm not greedy. I'm at the point where give me my money. I got set. I take low-hanging fruit. I'm in the mindset of low-hanging fruit. So on this one, I didn't have a specific place for my second exit because I didn't have anything to target in the immediate past. You know what I'm saying? This huge candle didn't give me a target. So I just left it. I just left it sitting where it was. And it's probably at a weird place because now that I'm thinking about it, right? When I got picked up here at this 4161, right? I grabbed it and I started moving it up because I was going to let it take me out like in the same spot, right? And then when it retraced back up a little bit, right, I just dropped it. I just dropped it right here. And then I took my stop. My stop was like, where was my stop? My stop was, oh, right. It actually, I think it lined up right here with this high because it was like 5 points. Yes, it was 5 points. It was right there at that high. And so I grabbed it and I slid it down. I slid my stop down to this small fair value gap right there. And when I slid my stop down to that fair value gap right there, when it started pulling back up a little bit, right, it came down and took me out of the trade. But the second exit wasn't based on nothing technical because I didn't have anything technical to base it off of, right? And for anybody who don't understand what I'm saying, like, for example, if I don't have anything to do it over there. Okay, let's go. Let's go here. Let's just say I got short right here for whatever reason, right? And I got 2 exits, right? I would put one below this low right there, come down, take me out, and then I'll put the other one at this low right here, because that's giving me something to target in the recent past. You know what I'm saying? So get short there, one exit would be there, then I grab the other one and drag it to this low, because it gives me something to target. Whereas when this trade over here, I didn't have anything to target, so it just kind of like got me out in a non-technical way. What's up, Marcia? You're very welcome. So true, balanced price range need expansion, leaving an order block called. Now, don't think about it that deep. Don't think about it that deep. You complicating it right now, little Hawk. Don't think about it that deep. Just think about once it offers buy side and sell side and then leaves, balanced price range. Don't now how it leaves is important too, right? How this right here, that's when you should be chomping at the bit looking for an entry. Why? Because it's leaving imbalances, it's leaving in a hurry, and it's leaving imbalances, right? Like the part where you get into on the end when it says expansion leaving an order block causing a break in market structure and fair value gap, that ain't got nothing to do with the balanced price range. That's all part of you looking for your entry, right? The balanced price range is just one piece of the puzzle. That's just one piece. That's just another thing to have in the back of your mind when you're looking for that expansion. And okay, I put it to you like this right here. In this instance right here, right? In this instance right here, if we're looking at all this, let me we can say, right? We can say that, let me get me a what do I want so y'all can see it? Let me get me a Fibonacci. I'm gonna get a Fibonacci, right? All this right from that high to that low, we all can agree that that's one continuous price move, right? These are 1 minute candles. This right here is one continuous price move. Let's go to the higher time frame now that I done mapped that out, right? Matter of fact, y'all say y'all like looking at it on Trading View, so I'm gonna go there. I jalapies for that. My bad. I should have been had it on Trading View. I truly jalapies for that. Let me map it out first, like I did on the 1 minute. I'm squanch this up. Get me a Fibonacci. Right? We can all, hey, low, hey, get on my screen. Right? We can all agree that from that high to this low, right? Oh, peep this right here. You see how this consolidating right there in the middle? That's at the 50%. At 50%, that right there may be the bottom of this run. That may be giving you a reversal signal. Why? Because it consolidated right at the midpoint. It consolidates at the midpoint. So now we came here, right? Pulled back down, wicked off of that. We got a break in market structure, right? Very tempting right there. Very tempting right there. Will it continue up? I don't know, but that's just stuff that I look at. Anyway, what I was saying, right? That's a one continuous price move, right? Let's look at it on the hourly chart, right? You see how I look on the hourly chart? From that candle's high to that candle's low, right? Let's look at it on the 15-minute chart. One continuous price move, right? On the 15-minute chart, that's one continuous price move, right? So on the 15-minute chart, it's just falling down, right? It's just falling down. Let's look at it on the 5-minute chart, right? On the 5-minute chart, right? It's just falling down, right? Now let's go back to the 1 minute and expand on those balanced price ranges, right? Now, looking at this right here, this right here helps you to, right? Since we came out and we came all the way down here, right? Get to that low. I went from there to there, right? If you're trying to look for your entry to buy, right? If you're looking for entry, to sell, looking for entry to sell, and price has come from here to there, right? You have a fair value gap right here. Where's that fair value gap in relation to this entire price move right here? Somebody put it in the chat for me. This fair value gap right here, the one that I took my entry on. Let me change the color of that. Make sure y'all can see that very good. Right? Thanks, Lil Hawk, for asking about balanced price range. I haven't been confident in knowing if price is balanced. Thanks for taking. Oh, you're very welcome. Right? In relation to this move right here, right? That's the high, that's the low, that's 50%. Where is this fair value gap in relation to this move? In a premium or a discount? Put it in the chat. Somebody put in the chat. Where's that fair value gap in the relations to this move right here? Premium or discount? Right. This is the actual fair value gap right there, right? But since we went through part of it, I'm just going to mark it like this. That's how I'm marking it, like that. Then I'm marking out that volume imbalance right there. Very good. Discount. It's not a premium. See, Walt, this one here. This one here. That one at the bottom. It's in a discount. It's not a premium, Karen. It's in a discount. Anything below 50% of the range that you're looking at is in a discount. It's not premium. High is discount. Anything below the 50% of the price range that you're looking at, this is the high of the range. This is the low of the range. Anything below 50% is a discount. Anything above the 50% is a premium, right? Now, this fair value gap for this price range right here is in the discount, right? This fair value gap right here is in the premium. This volume imbalance is in the premium, right? Now, I know you're looking at this saying, Tim, why would you take a trade to sell if you're in the discount of the price range? Very wise question. What initiated this topic? Lil Hawk was talking about balanced price ranges, right? So I said the expansion, leaving an order block, causing a breaking market structure and fair value gap. I say you overthinking the balanced price. All of that piece down there from this sentence right here. So true balanced price ranges needs nothing but the price to leave it. That makes it a balanced price range. When it offers buy side, offers sell side, and then price leaves that area, We now know that's a balanced price range because the algos left that area. They're done doing what they need to do. They've offered all the buy side and all the sell side that they need to offer at this time. They may revisit it in the future, but offered buy side, offered sell side, and booked it. When it booked it, balanced price range. Now, how does little Timmy Rogers use balanced price ranges? Let's turn our attention back over here, shall we? All right. This is in the discount for this price run right here. But the market let us know with this move right here, that candle, this candle, that candle, that candle, really this candle and that candle, right? So this candle and that candle, the market let us know that this little area right here that little area right there, right? That area right there is now a balanced price range, right? This little area right here. So what do you do with this information, right? Now, hey, little Hawk, get off my screen. What do you do with this information? What has price done? We've taken buy side. We've taken buy side. I don't have the annotations on here. So let me see. There you go. We've taken buy side, right? We've come down. We formed a balanced price range. How do we know that? Because price left it, right? We don't anticipate price going back above that balanced price range because price left it. It's done. It's done what it needed to do. It offered buy side. It offered sell side. It offered sell side, buy side, sell, and left, right? So now, instead of looking from this high to that low, we don't expect price to go back above this, right? We can come over here. We can now come over here and look at from either that high or that high. Either one you want to pick. I personally would pick the highest high because it's the start of the move, right? This is the start of this down move right here. So you pick that high right there. Now, where's that? Now, where is that fair value gap? Now, where is that fair value gap? Yes, it's going to act as a type of resistance. Yes, it's acting as a type of, I'm anticipating it to act as resistance right now because it just left that area. I don't expect it to go back up through that area. I'm anticipating it to be resistance now. So now, where is that same fair value gap at now? Is it in the premium or the discount? Right? Now we're not looking at this entire run anymore because the algo is done with everything up here. The algo is finished with all of this stuff right here. Right? It's finished with all of that. So from this low, where's the high that started at? Right there. Right? So now, where is that? Let me get rid of this stuff right here. Don't need this. Now, where is that? Where's that fair value gap? A premium. Very well. Now the fair value gap is in a premium. And what do? We sell in premiums. We buy in discounts. That's how I use the balanced price range to help me because so many times I was missing trades. I was getting left on moves because I didn't understand how to incorporate the balanced price range into what the algorithm was going to do. Right? I was leaving it up here as the market was coming down and waiting for it to come back to a premium so I could sell. The algo is done with this area now. So now the range is there, right? And then peep it. The same thing over here. We said this was the balanced price range, right? The algo left that area, right? The algo left that area, right? Come to the low, right? Go back to the high that started that move. Where's that fair value gap at? Right there. Come back to it. Did it go wick for wick? Look like it went wick for wick. It's in the premium now. Why didn't it go up here? Right? Because the algorithm is done. The algorithm is done with this balanced price range right there. It's finished with that. So you don't want to keep it up here, right? Because it ain't messing with that no more. It's here now because it's done with that. Come up, right? Where did it stop? Where did it stop? Right there. Right there. This is the candle that left that area. The candle before it, where did it come? Right there. Kissed it. Pretty. Kissed it. Turned around. Right? Turned around. Look at that. Remember I said that was tempting? Remember I said that was tempting right there? Where did it come? It came down and revisited this wick right here. Overshot it a little bit. But look here. If you put your stop loss below that low or below that low, ain't nothing wrong with a little heat. You know what I'm saying? Then I said that looked tempting? Did I not say that looked tempting? Right? And then it gave you another opportunity right here. Took out that. Boom. Did I not just say that looked tempting right there? And you see it live. You see it live. What did I say? What did I say? I said, look at this right here. Right? You saw it live. We talked about this is why I'm telling you, if you understand what I'm talking about, you are there. You may not know you're there, but if you understand everything I said today, you should be patting yourself on the back right now. Right? When I ran this Fibonacci, I said, oh, look at there. It was consolidating right there in the middle. This probably going to be a reversal because it consolidates in the middle. That might be the end of the run. And then I was like, oh, yep, ooh, that looked real tempting right there. Very tempting. Right? Well, Tim, if it looked tempting, why you didn't take it? I already took my trade. I've traded. But I'm done. I'm done. That's why I'm sitting here running my mouth with y'all. Right? But look, you see it play out. Right? You see it play out. Ain't nothing. That's why you got to understand right here. Right? If like looking at this right here, you thinking, okay, Tim said this look very tempting. Right? What is the downside risk? Let's go through the downside risk on this right here. Right? You got a long wick right here. Consequent encroachment. You got a long wick. You anticipate price to come back to that consequent encroachment. If that consequent encroachment does not reject price, right? You got this low right here, right? That's you got a low right there. Right? You got a low right there. If it takes out that low, then you can say, okay, we coming to get this low. But if consequent encroachment rejects that price, right? That's all to the good for you. But your entry is right here. That's your fair value gap right there. Right? Depending on how you take it. On a large fair value gap like that right there, y'all already know I'm shooting for what's the name? I'm shooting for consequent encroachment. Right? For a fair value gap that big, I'm shooting for consequent encroachment, right? So boom, consequent encroachment 41, 45, 50, right? 5-point stop loss, 41, 45, 50. That's going to be at 4. That's going to be below this low right here. 40, where is it? 41, 45, 50. So it'll be 41, 40, 50. That's going to be below this low right here. Boom. Your stop loss down there. Never in jeopardy. Never in jeopardy. Right? And where are we now? 41, 45, 50. 10 points. 10 piece right there. 10 piece right there. And going. And going. I would have been out over here. No, a little bit higher. Right there. Right around, probably around 52, 53. I would have been out around 52, 53, right there somewhere, right? Because I want a little over 5 so I can cover the cost. But we just talked about this. Came in here, you know what I'm saying? But based off the fact that we understand what's going on, we do the work. Soon as I ran the Fibonacci's, saw the consolidation in the middle, right? Based off how we do the field projections, we know it consolidates in the middle. So since this big consolidation landed right in the middle, it's like, hey, this is going to be, is it going to go all the way back to the high? I don't know. But this is the time for the market to turn around and say, hey, I'm getting extended. I need to get back up to the premium. I'm in a deep discount right now, right? I'm in a deep discount right now. I've come all the way back down here to this breaker right here. Tim, how can you just call this stuff out like that? Because I've been doing it for a while. I put in the work. I've come all the way back down here to this breaker. Boom. So I didn't even see the breaker until just now. I just looked at this right here. So now let's put everything together, right? We extended this out. We saw the Fibonacci line saying this was the middle. Clue number 1. Look to the left. We got a breaker right there. We got a bullish breaker right there. It stopped at the bullish breaker, and then it came back and gave us a break in market structure, shifting sentiment to the upside with some heavy aggression, right? Pang out! We got a pang out. So we've come down, hit a breaker at the potential end of this run because the heavy consolidation is at 50%. Pang out! That, now that I'm seeing all of this, that makes it even more tempting. But just the fact that it was 50% with the pang out, with the, you know what I'm saying? I was like, hey, that looked very tempting right there. But with the breaker on top of it, on top of everything that we understand about price, this is the stuff that you have running in the back of your mind when you're looking for that fair value gap, when you're looking for that breaker, when you're looking for that order block, when you, it's not so much about this fair, it's about knowing I don't need to be targeting this order block after price got here. I don't need to be targeting this fair value gap after price got here. I need to be looking at this one. Why do I need to be looking at this one? Because all of this right here is now a balanced price range, and we still haven't got to a downside destination. How do you know that, Tim? Because we're inside this huge imbalance right here that was created by the news wick. The news wick created this huge imbalance. So now that we're coming back down, what is the logical stopping point, right? The logical stopping point, right, if the market was truly bearish, would be below this low, right? So if I'm up here, I'm not looking for the market to stop until it hits this low. This is the draw on liquidity, right? But Tim, it didn't hit that low. I'm glad you said that. The market left a clue that it may not hit this low. What's that clue? This breaker, that breaker right there. That breaker's job is to stop price from getting to that low. When we got to that breaker, look what the market left a clue. A huge consolidation right at what the algorithm knew was going to be the 50%. How did the algorithm know that? Because from this high to some point in this breaker that they needed to get to, right? Some point in this break, let's check the mean threshold of that breaker. Let's check the mean threshold of that breaker. Look at God. Look at God. The mean threshold of the breaker is 4140.75. Look at this number right here. Let me blow it up big. You see that where it says L right there? What does that say? 41.40.75. 41.40.75. Both of these candles stopped on a dime at the mean threshold of the breaker. So the algo knew the mean threshold of that breaker was 41.40.75. So I needed to run liquidity up all the way up to 41.77.75 in order for this to be the area of consolidation. The algo started consolidating right here in the middle because it knew from 41.77.75 down to 41.45.75 that 41.59.25 was consequent encroachment or equilibrium or mean threshold. They all the same thing. It's just one is for a mean equilibrium is for a price range. Consequent encroachment is for an imbalance, and mean threshold is for a reference point. All of them mean middle, in the middle. In the middle. Got to put a little vibrato on there. Hey man. Hopefully I was able to share something that helped somebody. All right. Hopefully I was able to share something that helped somebody. The balance price range thing, did I help in explaining how I use it? Did that help Lil Hawk? And I think Hines said something about it. What in the world? Where did this guy show up? Where did this guy show up? What's up, Mark, if you still in here? Would you consider that area where the new low? I don't know. I don't know which one you talk about. I'm sorry. I'm seeing this super late, so I don't know which one that is. Definitely spitting game, Tim. Thanks for explaining it. You're very welcome, Shaquille. Never mind. You just answered what I. Aha moment. Okay, that's what's up, man. That's why I do what I do. That's why I do. You are killing it. Extremely proud of your growth and inspired by it. Hey, I appreciate that. I appreciate that, man. I'm just a simple dude from Fort Lauderdale, Florida, trying to share something that I learned. I appreciate you, Marcia. I appreciate that. You feel me? You feel me? You have a great grasp of this. You're so inspirational. Marcia. You're so inspirational story. I probably should say you're such a. Thank you for reminding us that we are going to get there, Lil Hawk. That's what's up, Lil Hawk. Failure swing after hitting 41.40.75. Yes, it was. Very, very good. Very good for spotting that. I appreciate that. Yes, it okay. I think glad it helped. Just keep practicing it, man. That's what I had to do. I just had to keep practicing, you know what I'm saying? Because I kept missing so many moves because I wasn't understanding that price is done with this area. And I was waiting for price to come back up to different imbalances that it wasn't going to go to anymore. You know what I'm saying? And it was because I wasn't realizing once price leaves that area and it's offered buy side and sell side, once it leaves it, you know what I'm saying? It's done with it. It's done. It's gone. It's gone. You know what I'm saying? Again, look over here, right? There's, you know what I'm saying? This ain't no, it ain't no consolidation here. There's no consolidation there, right? But if we look at this area right here, right? What did the market come back to? On this pullback right here, when it came up and it started pulling back, what did the market pull back to? Right? Right here, it left this area right there, right? It left that area right there. So now, all this right here, we offered buy side, sell side, buy side, sell side. Then we left. When we left, when did we leave the area right here? Left the area there. All this a balanced price range. Price went up, stopped right there, pulled back. Where did it drop to? That balanced price range. Now, prior to, Lil Timmy Rogers would have been waiting for this fair value gap right here. Right? I've been waiting for price to come down to that fair value gap right there. Why? Because we still left that open. You know what I'm saying? We left that open. I would have been waiting for price to come back into that fair value gap right there, because I would have been looking at that high. I would have been looking at that low, and that fair value gap would have been in a discount, and I would have been waiting for price to come back down there, and would have been extremely pissed off because it didn't come get me. Right? Will we rock it up? Will we rock it up and take off? I don't know. You know what I'm saying? It's 10:30, 10:23. We, you know what I'm saying? We like been doing a lot of trading, all kind of stuff. It's like, but when I started learning how to look at this stuff, I'm like, hey, I figured something out. Just trust the process. Thanks for walking us through this. Very helpful. You're welcome, E. Hey, man, that's it. I'm going to go ahead and call it. I appreciate y'all for hanging out with me again. Hopefully I said something that helped somebody. If I didn't, I'll try it again on the next one. Always remember, if you're going to trade, please trade safe. If you're not going to trade, please take copious amounts of notes so you can go back and study what you saw. And please, if you're not doing it, go back and watch the price just print during the time frame that you plan on trading. Just go back and watch it print. NinjaTrader makes it very easy. I don't know how TradingView does it. I haven't tried it. I don't know how Thinkorswim does it. But NinjaTrader, it prints it back just like it's in real time. Like it print the candle one tick at a time during playback. So go back and watch it for the time frame you plan on trading. Go back and watch it so that you can start to understand how price prints and watch the difference between the delivery of that price. How did it get there? How did it move? What it, you know what I'm saying? Watch, just look at all of that. Look at all of that. I'll see y'all. Slap Rock, he a teenager. So it's like he say I ain't rushing him. He say he want to start it, so I'm just waiting on him when, you know what I'm saying, whenever he's ready. Whenever he's ready, then we're gonna get into it. But he's a teenager, he's doing his music, he's, you know, but he's very interested in it. But it's just one of the things where I guess he's trying to balance everything on his plate, and he's balancing the stuff that he want to do. He's prioritizing what he want to do first. I think I've heard that TradingView doesn't do it well with print and okay, it don't print on replay candles. Yep, in his own timing. That's what I say. In his own timing. Hey man, that's it, man. I'll see y'all tonight at Hey, we actually got back down to that fair value gap, the one I was talking about before. We actually got back down to that fair value gap right there. I ain't got my screen up. We actually got back down to that fair value gap, the one I was talking about before, right? Right there. Now, what this can be, can this be like clean up, make sure we do it neat, or because we left these smooth highs right there, right? We left these smooth highs right there. Can this be clean up to make sure we make it neat? Or look at this here. Can it be just like a retracement back to this area right here to drop down, right? The longer you go into price moving, right, the more selective you have to be with your entries, right? The longer you go, especially if you're trying to get like larger moves. You know what I'm saying? If you're trying to get like large, if you're only trying to get like 5-point moves like this right here, boom, 5-point move, there you go. That's Gucci, right? That was came down, boom. That's 5-point move right there, right? But if you're trying to get like large runs, you have to start being more selective about where you at. Came down to that balanced price range, gave a 5-point move. We got, did we get, yeah, we actually got above that high. I didn't even realize we got above that high, right? And remember what I was talking about. Anytime you break or high, that's a potential to reverse. Do it mean you're going to reverse? It don't mean you're going to reverse, but anytime you break a high, it opens up the potential to do so, right? So that's when you got to start coming in and really understanding what price doing. That's when you really got to be like, okay, what have we done? We just came back down. We got back down into this fair value gap again. Now we're pushing up. Okay, we're disrespecting this fair value gap, right? Let's see if we're going to disrespect this fair value gap. Once we break this high, right, then it might be a potential to come back down to an imbalance. That's when you really got to start going in and dissecting what's going on. You know what I'm saying? You got to really and shoot for them small moves, them little small moves, right? This one here popped up there. Now you came back to there again. Boom, hit that one there. It's an imbalance down there. Is it playing cleanup or is it petering out? How do you figure out if it's playing cleanup or petering out? That's when you start looking at what are the other indexes doing? What is the dollar doing? Is it starting to getting ready to do a shift? Start looking for, hey, what's going on? We feel the faddling around. What's going on? You know what I'm saying? That's when you got to start pulling out all your handy dandy tools to try to figure out what's really going on with the price. You start looking at the other indexes. You start looking at the dollar. You start looking, you know what I'm saying? You're looking at the time. What time is it? You know, all this stuff. You start pulling out all your tools, pulling out all your tools in your toolbox. That's it, man. Look into Forex Tester 5 for him to practice on. They have a great sale for a year subscription. It's a great tool. I just got it and I love it. Forex. Okay, that's gonna make my head hurt. He's just gonna practice on Ninja Trader. 5 points, easy peasy. All right, man. I'm gone for real this time. I got to get ready to go to the gym. I'll see y'all at 6:30. Gone.